Tuomas, welcome to the Pantrium podcast.
Thanks. Great to be here.
Of course, I've been looking forward to it. I've been preparing myself for this conversation. You are going to be the second guest in this little mini series, which we call Exit. And here we're going to dive into the real stories, the feelings. What does it actually take? What does this mean to build something and perhaps also just let it go afterwards? We have a tendency in the business media to glamorize, talk about all the fundraising and the exits and all the cash in and stuff. But I want to talk a little bit more about what it actually means. And
Sure.
Tuomas, I think you have a really interesting story to tell.
So I hope.
I think so too. We're going to go full circle today because we're going to talk about Holvi, which you founded in 2011, which we'll go into in a moment. You sold it to then reacquiring it. So full circle indeed. So are you ready to dive in, Tuomas?
Absolutely. Let's
Perfect.
get going.
Let's get going. Let's get into it. And let's start about like building before selling. Let's go into that side of it. So bring me back to you founding Holvi in 2011. It was before the Fintech even became the word that everyone knows today. And you could say that you were the pioneer. You were one of the first neobanks launching back then. How was it early on building Holvi? And did you actually have an exit strategy from day one? That's one thing I want to know about.
Well, I mean, it definitely was like it's 15 years now, like since like early 2010s when we started, and it was of course like a completely different world then than it is now. I mean, as a company, we're headquartered in Helsinki, Finland. Our first institutional investors, they would joke that like, hey, we've got this like fintech strategy, but does that mean that we can invest in Finnish companies? Is that like what fintech is all about? Like, I mean, the term fintech, it just like really didn't exist, and it's sometimes even hard to go back to like to like 2010s, how different the world was. So in a way, it was kind of super interesting times. Well, pioneering something that really as a category didn't exist, but of course that brought a lot of its own challenges because there was no templates. It was like how do you do something? You just couldn't even know like is this possible? Is this can the regulation support this? Or the partners that you need, et cetera. So like these days, it's so completely different in terms of the kind of the building blocks that you can bring to play and build something. So like we really had to build everything from scratch, and that also shows in our technology even to this day. Like everyone always asks, like, so you have this and that and this other component. Like, why do you have these in-house built? Like, don't you know that there is this and this SaaS service that you could use? Well, back then there wasn't. And since we have it in-house, like, yeah, we're happy with that.
And it's very fascinating, as you were saying, you were, as early on in the fintech wave, if you will, it was really thinking about, okay, how do we actually build the rules of the game, and what does it mean, and who can play and who will win in a way. Speaking of winning, did you have an exit strategy from day one, or was that something that you built, you matured into?
Well, I mean, the genesis of the company is that like part of the founding team, we had our own small business. We were running a software development boutique. And then the other half of the the founding team had their own graphic design agency. So we were all like small business owners, and we'd also been super active in different kinds of nonprofit activities, event organizing, etc. We kind of really felt that hey, there is just no good solutions out there for small businesses that just want to be doing whatever graphic design or writing software as consultants. Like that's their business. They're not in a business of business management. Like someone should take care of that. And really kind of this software solutions that would bring together the financial management and the banking into a unified whole just didn't exist. So, and we had built some software to run those event organizing and nonprofit activities. And then, like the early 2010s, there was on EU-wide some legal changes. The first iteration of Payment Services Directive was coming into force, and I don't know where it really came from that we kind of put those pieces together. That like this thing that we would want to have as entrepreneurs doesn't exist. I mean, we can build this, and the law would allow to do that. So, in that sense, it started really as scratching our own itch to get that done. But then, of course, as we catalyzed to work with kind of savings we had from our consulting activities, etc. But then we brought in first angel investors and then VCs, and of course, like then if you bring external capital, the external capital does want a return. So you are setting yourselves on an exit path, no matter what. So in that sense, in the very earliest days, to answer your question, like exit was not on our minds. We just wanted to have like the solution that would make our own businesses and other entrepreneurs' business easier. But then of course, bring external capital, things change.
Yeah. And starting with one's own itch is always a good start, right? And I wanted to tap on to what you just said there in terms of investment. So you started with angel investors, which opened doors for you also from an advisory perspective. Believe that was around 2014 or so that you did that. And I wanted to ask you, looking back on that journey, what would you have done differently, and what would you advise founders to think about or consider as they move into that phase of their, it might be bootstrapping or pre-seed?
Well, I mean, it's of course always hard to like what would I have done differently, because of course the world was very different then, and you always make the calls that you make based on what the circumstances are and the information that you have available then. So looking back, you just have so much more information that of course you would have done 100% everything differently. So I always find it a little bit difficult to get into the shoes of 15 years ago. But I think the usual kind of startup advice applies that if you bring in external capital, then you do have this extra set of stakeholders, and the more you're aligned with what and how your capital backers want to achieve their objectives, then of course the better it is for you. So I mean, not all money is equal. What's behind the money is much more important.
Yeah, and it's also about, perhaps respecting that it's someone's money, right? And that, of course, it's an investment from their side. So that also come with some liabilities. And with that, as you're scaling, you are bringing investors on board, and you have stakeholder management with them as well, because they're equally also, they have an expectation that you grow to prove that their investment were worthwhile. What's some of the lessons that you got from that experience that is perhaps are still valid today, regardless of how the game have changed and everything is moving around us? What would you say some of the lessons that you would share with founders when it comes to taking in money and then starting to have that new set of stakeholders within your organization? Does that change the dynamic and the focus of your business, and if so, how?
Well, I think especially if you're in the fintech space or like any like highly regulated space, what I always kind of like if someone asks me that like that they have this fintech idea and they like to do whatever business, that like you have to know the regulation, you have to know the law. You can't kind of outsource that hey, I've got these lawyers and they're gonna tell me. You really have to understand the playing field, and so much of the playing field is understanding kind of the regulatory background. I used to say that you have to have to read the law yourself, go to the sources. Well, these days, maybe you can use Cloud Call work and get summaries, but like you still need to understand it yourself. And the same kind of comes to investors. Like if you are in a regulated industry, you're taking in money, you really should take the type of investors who understand what it means to be in a regulated industry, because it is a completely different game. Like let's say you're setting a startup in the lending space. It's very easy to lend money and grow fast, but the hard thing is to have the customers actually pay back the loans. And if kind of the investors don't understand what are the limitations of being a regulated business, like growing super fast by having super lax KYC on onboarding might look great for a while in your growth numbers, but it's not a very good strategy long term. So your investors have to understand that it's regulated space a little bit different. Whether it's fintech, whether it's medtech, anything, like regulated space is different.
Mhm. One thing I just thought about, Tuomas, actually, as you were speaking there, because I'm taking a board education for fintech scale-ups, and one of the things we talked about is that the maturity of what you need as you grow through the different phases in your growth as a business changes. So therefore, also the type of investors perhaps changes over time as you grow. The same with the type of board members that you need on board as you grow. When did you introduce a board to your organization, and did you see, or do you remember a certain switch or a period where things changed dramatically with your setup?
Well, I mean, for us, it was important from like very early on, because we got regulated also like very early on. So it was very helpful that the earliest cohort of angel investors, they came from the financial industry, so they had the background, and we had kind of relevant folks from the angel investors sitting on our board, because as you got regulated, got your regulatory authorizations, the regulator, of course, was interested who is on the board and what's their experience. So in a way, we kind of build maybe a heavier board earlier on that we would otherwise have done.
I wanted to move forward with, as we then look at handing it over to someone else, because around 2016, I believe it is, that you got sold, or Holvi got sold to BBVA.
Yeah.
Walk me through that moment where the idea of selling Holvi came to you.
Yeah, I mean, here we need to also go back to like what the world was in the 2014, 2015 time frame. Like none of the big fintech rounds had happened. Like big Revolut fintech investment hadn't happened because Revolut didn't exist. And most of the companies were founded like around 2016. So the kind of fundraising at that time was kind of like much more challenging than it probably is these days, especially if you're looking like larger chunks of capital.
Yeah.
So when we were raising around as part of the discussions, we also got into discussions with a bunch of strategic investors, because that was also kind of the time when the classic banks were starting to wake up that okay, there is this thing fintech, and there is these companies that are actually providing things under a slightly lighter regulation, still regulated but a little bit lighter, doing things completely online, no kind of branch offices and stuff like that. Then kind of our pitch of, hey, we've already been doing this for a number of years, and we know how to acquire customers fully online. We know how to go to additional markets fully online. So that resonated quite a lot with strategic investors, and then in the end we had the opportunity to select among a couple of strategic investors, and decided to then join what was then called the BBVA New Digital Businesses, a unit specifically for new digital businesses.
I've heard in some of the other conversations and interviews you've had around this that, of course, you did your own due diligence, right? You went out to previously acquired businesses, Simple and their founders, to ask around, like, how is it to then be brought into BBVA and getting recommendations and so forth. Looking back, is there something that, because now we teased early on, you're going to reacquire, we're going to get to that. But looking back, is there something you have wished you had asked the founders at Simple at that time that you did not?
No, I don't think so. So like Simple, the US consumer neobanking pioneer had been acquired by BBVA year and a half before, so they had been part of the new digital businesses unit for a while, and we knew the Simple founders from the Fintech scene, so we of course got like asked a reference from them, like how is it to be part of BBVA. Um, I don't know if there is anything specifically that I would now ask, because of course how the future would go was also very much unknown for them. So I don't think that anyone would have known, uh, especially as like the later events for us were also quite materially affected by COVID and other kind of like macro shocks, which who can predict those?
Exactly. And I think, I myself has been lucky enough to try to go through an acquisition, as I was at Aya when we got acquired by MasterCard. And, I know from, I was the chief marketing officer there, and I know from still within inside the organization, but still outside of the room where the signature gets done. And like everyone gets so excited, and you had a massive party and champagne, and everything is amazing. And the news media is covering it because this is fantastic. But Tuomas, for you, like that day when you were signing that paper, how did that actually feel? Like, how was that moment for you?
Well, I think it for me personally, and I think for a lot of folks on the team, did not really feel like, okay, this is the end of the journey, but this is a milestone, because we all like a big part of the rationale why we kind of joined BBVA was that we kind of really felt quite strongly that what we're building like really makes a lot of sense, but it probably will take a little bit longer than we expect. It will probably cost a little bit more than we expect, and we were all kind of like pretty happy to get kind of this backing that okay, now we can maybe focus more on the building, bringing the services to customers than the every year and a half going on the fundraising trail, which of course always, as everyone knows, is a huge distraction for the management, and then when management is distracted, it's a distraction for everyone else. So we were quite happy that okay, now we can focus on what we kind of really want to do. But of course, there is always a little bit of like apprehension or anxiety or whatnot that okay, now we don't have nearly as much control as before, and what's this going to mean, et cetera. But of course, for us, because we were independently regulated, that meant that we continued very much operating in the same way, except that then the old board members were out, and new board members coming from the new owners into the picture, and certain corporate rhythms incorporated into our more startup-y way of doing things. But really for us, it was not the end, but like a milestone on a longer journey.
Not the end, but a new beginning. I wanted to ask you, because you were also there alluding to that you were still running independently within BBVA, and I'm curious because even though you are self-regulated and that you could run by yourself and so on, there must have still been some sort of restraints, because you must still have gone through some sort of migration or integration and so forth. In the day to day, how was that, and how did the teams find that new process of working in a bank? How was that kind of cultural change as well?
Well, in a way, we actually did not really go through an integration. So,
Mm.
like in terms of the kind of vendors or the technology or anything, we continued operating as we were before, and then and our own kind of licensees. Then kind of the maybe the biggest difference, of course, was that as a regulated entity, we had our internal like compliance teams, but then the compliance teams had compliance teams on top from the parent
Mm.
company.
Yeah.
So on that sense, kind of on compliance and risk management, you can kind of think that the parent company was sort of the your external audit function on everything that you do. So kind of we still continued very much as things were before, but of course proactively explained to the parent company that what we're up to, and
Yeah.
and maybe a little bit more guardrails on not getting up to anything too
Yeah.
crazy. Even though, of course, our mandate was really to like within the constellation of the corporation as a whole, kind of
Mm.
find the ways to service businesses across Europe fully digitally. Under a slightly lighter regulation than a full bank, but still doing that in a way that the parent company was comfortable with.
And over the time, did your role change within Holvi then after you became part of the bank?
No, I mean it did during the time that we were owned by BBVA. My role was much more on the technology side. So I was running our payment systems, doing the payment integrations, etc. And one of the kind of the beneficial things that we could do with the additional financing and longer term horizon with the parent company was that we could then kind of join directly, whether it was in terms of card issuing, joining us as a direct Mastercard member, whether it was SEPA payment processing, kind of starting to do that fully as a full BPC member, etc. So there was quite a lot of technical build on the payment side and on the product side.
With the promise and what you had hoped for, as you were saying, also leading into that acquisition, that you knew it was going to take longer, it's going to cost more to really bring Holvi to the next level, right? As you kind of came towards the end of that journey with BBVA, would you say that you succeeded with what you had originally hoped as you were going into that new kind of journey and phase with Holvi?
No, I think we did. Like in terms of being able to positively impact more customers in more markets. Absolutely, we had the resources to really build our market presence. Like before the acquisition, we already had the pan-European license, and we were kind of, for example, I'm now here at our Berlin office. We were in the for example, the German market, like before the acquisition, but
Mm.
like the scale was very small. So with the additional resourcing, we could really build up the customer base and the kind of the market presence that well was really completely different than before the acquisition.
Yeah. I'm jumping back to something. You had some early experiences from the growth of going to market and expansion and so on. And I apologize. I don't remember if it's when you were within BBVA or if it was just before. And I believe it was in the UK that you went into, which you then extracted from again. Or am I remembering incorrect? Oh, did I lose you? I just read Thomas's email. Um, his laptop got unplugged when he moved his camera just before we started recording, and he accidentally moved his laptop out of the plug, so it went out of battery. Which is actually what I thought. just as I realized that he was not here anymore. But he should be joining us any moment again. I will continue our conversation. Let's see how this is going to work.
Did you get my email? Like,
I did see your email. Don't worry. You know what? I thought there was two options here. Either your laptop had it to restart and be rebooted you and we're like, I don't care, he's on a studio recording right now, he's off. Or second option, he ran out of battery.
yeah, it was the second option. I prepared that. I had it plugged in, but then when I was trying to get this lunch, then I disconnected it.
Totally okay. Yeah, Riverside is like stealing your battery. Like
So
it drains your laptop. Note for any future guests, make sure that you are plugged in and all that. I don't know if you heard or where exactly you dropped off. Did you hear my? So I'm just going to repeat the question I had just before we did a small little organic break here.
Yeah, please do.
I remember that you had talked about previously going into the UK and some learnings there and had to extract. Was that doing BBVA or was that leading into, and what were some of your lessons from that experience in terms of scaling and having to figure out what's right for Holvi and what's not at that point in time?
Yeah, I mean, we did do expansion to the UK market, and we built like a reasonable like early cohort of about 1,000 business customers. We had like the full UK localization in terms of local payment systems, faster payments box, all of that. But then we actually decided, and it was still under BBVA, decided to exit the UK market, and there is one reason for that, and that being Brexit. Because at that point,
Brexit.
exactly. Like at that point, we kind of could have continued in the UK under the whatever it was called, transitory regime. But then we knew that within a couple of years, we would need to then apply a separate licensing in the UK from the UK FCA. And then the decision was that, okay, this is not an investment that makes sense to run two regulated companies, all of that. We would have needed to then set up actual local UK operations. We were operating in the UK fully cross-border basis, which you of course can do within the EU, but then after Brexit you could not do. So it was then a clear investment decision that let's put the money rather into the markets in Europe rather than take that extra investment to be in the UK for a long haul. I mean, a shame in very many ways. We were still at that point, like there was kind of Monzo and Starling, a very early Revolut, but for consumers only were there. So the market was still kind of like, now, of course, the competition on UK market is fierce, but like it was still quite open, but still would have required kind of significant investment.
I wanted to take us to the moment when you decided to take back Holvi. Were there a specific trigger or something you remember that, and you alluded to it a little bit earlier, but tell us a little bit more about that moment when you realized there was an opportunity and that you wanted to take back, reacquire Holvi?
Well, I mean, it was really a window of opportunity in a way, open up for us. As I mentioned, we were part of this new digital businesses unit, which had been a long established unit. But then, of course, it was 2020, kind of peak COVID, a lot of uncertainty. And of course, then everywhere, the focus was a little bit more on kind of investing in profitability, investing in the core rather than innovation stuff. So from that point of view, maybe we were not kind of in that peak moment of uncertainty, the priority. And of course, in some ways, also our mission had been fulfilled. Like 5 years before, all things digital were a little bit of a newer thing in the industry. But then fast forward 5 years, it started to be really kind of something that everyone does by quite large extent. Um, there was also a little bit of external triggers where in the fall of 2020, BBVA sold all of their US operations, and a couple of our bigger sister portfolio companies then were kind of exiting the constellation at the same time. And putting all of these together, it gave us the opportunity to put on the table a management buyout for the business.
It's still really interesting that you go in this full circle, right? Because you could also have just said, nah, not interested. There's this great opportunity. There could be a possibility, but, nah. What made you think, actually, I would want to continue with Holvi and bring it forward and not because would the alternative have been that they would have closed Holvi if you weren't to reacquire?
Well, I mean, it's for them to say like what the other options would have been. But kind of for myself and the core team leading the management buyout, kind of the prospect of okay, let's there's an opportunity to do our own thing, and maybe we can change some things, and maybe move a little bit faster in some areas, and move like a little bit differently, and I mean, then also, of course, it would have always been an option to go and do something else, start something new completely from scratch. But like whenever people ask me that, okay, you've been with the same company 15 years, isn't that a long time and whatnot? I still consider it very much like serial entrepreneurship. It just happens to be the same legal entity, but because it's so different phases that have happened, it kind of almost feels like different companies, and like one of the key exciting things was that, hey, okay, we have this company, we have this base, we have the regulatory licenses and everything, but now we can almost start to like build something completely new, but we don't need to start by spending like year and a half getting licensed first, but we have kind of the core, and let's now build something a little bit different out of what we have already built.
So yet again, not an end, but a new beginning again for
Absolutely.
you.
Absolutely.
Not to have to dig too much into it, but I'm curious, how did you actually manage to do the buyout? Like how was that process? How did you go about that?
Well, pretty much the usual way. We did our due diligence on the business, and of course, in a way, being insiders, we knew the business pretty well, so it was easier than looking from the outside that what the value of the business would be, and of course, yes, insiders, but with full permissions, did the kind of the look at the business, and then we put a proposal on the table for what we felt that the value would be, and what we were willing to pay, and willing buyer meets willing seller, and deal was concluded.
Did you have any worst case scenarios for then when you, because it must also have been a bit of a gamble or risk from your side, right? Because again, the future would be uncertain, and as you were saying, you were buying in uncertain times, so it was, it was perhaps a gamble. Like, how did you see that at that time?
Well, I mean, we gave us like 50-50 odds that in 2 years' time we're either bust or we built something very interesting. So definitely the risk element was there, and we didn't even assume that it would be guaranteed to succeed, because of course, one of the kind of rationales going into back in 2016 joining BBVA was kind of all of the resourcing that we had, and did not have to go fundraising every year, but had the funding from the parent company, and then we went from quite significant annual funding to like to zero euros of external funding. So of course, it required quite a significant turnaround, and the risk was that if we don't succeed in the turnaround, if our deeply analyzed Excels would not actually match reality, then we would not have any company because it would not be viable.
What did that make you or the team also feel? Because it was, as you were saying, there's a 50-50 chance. Either we're going to live after 2 years or we'll have to find other jobs, new ventures, and do something else. How was that? Did that give you extra excitement, or did you have to kind of bring storytelling in also because as you were kind of reorganizing, and you were alluding to it there, but you had to also let people go and size down because, again, just your foundation and the offset of Holvi for the next 2 years to show that, are you going to make it or break it? How was that? Did the culture have to change? What was your challenges as a leader at that time?
Well, I mean, of course, it was like for everyone on the team, like the first 3 to 6 months was super rough because, of course, we had to significantly cut costs. So on like all the spending, we canceled all the company cards, um, and then only when a vendor would complain that, hey, we're about to shut this service down, then I was like, okay, how many seats do we really need on this
Yeah.
service? And so really kind of zero budgeting approach, that everything had to be kind of like given a rational again, that is this something that we want to pay for, and that really saved a lot of in cost. But of course, we had to shrink the team like significantly. We went from about 150 people to 65 people at the lowest point. So that's over half the team in terms of reduction. So kind of the early months were like, and I mean, as a Finland headquartered company, if you are doing like these types of significant layoffs, there is a very formal and lengthy process, a consultative process, which is a very good thing. But it takes quite a while to run, and you cannot really accelerate that. And that gives like 4 to 6 weeks of uncertainty for people that like you really don't, as a person, you don't know whether after this consultative process you will have a job or not. So that, of course, was a challenge to keep people motivated when they really had no certainty whether they can be then part of the next phase of the journey. But what I'm really happy about from that period is kind of all the investment that we did for then the people who could not continue in the journey for the outplacement activities, and luckily, and we of course can't take credit for that, but luckily, like the tech industry was in the spring of and summer of 2021, it was really on an upswing. Before then, spring of 22, more of a downturn. Um, People really found good jobs quite fast, and was also super happy and great to see how much kind of whether it was traditional banks or other startups valued people coming from Holvi background, because you would have seen really kind of the inside workings of a financial institution, but at a scale where if you're at a huge bank, you just see such a small slice of it. But at Holvi, the people would had seen really what it is like on a broad perspective. So valuable skills that we had made it possible for people to learn, and many were able to do a very like good step up in their career as their next venture after Holvi.
Yeah, I think it's great that you did that outplacement as well, because I think sometimes I think it was Pleo a couple of years ago when they had to let go. They created a website for all the great candidates, because it's not to say that candidates are not good. It's just they just unfortunately can't have them anymore, right? So
Yeah.
I think it shows a lot of character of the businesses in those tough moments. And looking back, Tuomas, for that particular, once you have unfortunately said goodbye to a lot of folks, and you had the team that are supposed to then or are set to carry Holvi into the future. Looking back, what did you do, or did your leadership team do that really changed in terms of building that culture? Because it also shakes people at the core when they see their colleagues move out of the office and they feel that everything has just been shaken.
Well, I mean, one thing that we did was that as we then had the possibility to have everyone having a direct stake in the business, whether it is through direct shareholding or through options. So we of course brought everyone has the kind of equity interest, equity upside as well on the success of the business. But then as a big cultural change was of course that um, because now where would the money come from? The money would come from paying customers, not from like the parent company as an investment, and then we build on that. So kind of for everyone that hey, now really we not to say that we wouldn't have taken care of customers before, but now like even more like we have to have happy customers who succeed with Holvi and feel that they are getting value for money and therefore are willing to pay for the services. And one of the things we did quite early on that we used to have customers who we charge for example, no monthly fees and not many other fees either. So then we instituted a fee for every customer. So all customers became fee paying customers. That was not universally positively received by the customer base. There was a segment of customers that felt that that we had tricked them that okay, offer free services, then you put a price later, and felt that kind of the unspoken contract had been broken. And we did lose a significant number of customers, but then doing the analytics on those customers that left, they were on a monthly ARPU basis, kind of so small that you would not have been able to operate a profitable finance or service, or like the unit cost like really outweighed what the customers were paying. So in a way, it kind of also cleared the stables in the sense that those customers who were not willing to pay and ergo maybe were not feeling that they get the value, so they left, and then we kept serving those customers that were willing to pay. So it really fixed the economics of the business quite significantly. So that was the big thing we did on the revenue side, and then of course on the cost side we did a lot of the both vendor costs and also shrinking the team.
Yeah. But it also just goes to show that it's never too late to introduce prices, right? Of course, as you were saying, also you need to do it in a good way that they understand why and that they feel that it's fair. And then, of course, there will always be people that feels that it's unfair because they would have wanted it for free forever and ever and ever. But nothing is free in this world, so that's
Exactly.
also perhaps a bit naive in a way. But I think it's it's sometimes something that fintechs are looking into, be like, oh, we do these freemium models, but then when should we introduce price, and can we really do that? But as you're saying here, you should, because you're also in a business. You're here to earn money, and I think the spring cleaning or figuring out what services are you actually paying for and are you using it should be something all businesses should do. As just a regular review, just like we should do on our personal side, right? What subscriptions are we no longer actually using and just unsubscribe? One of the things I wanted to ask you here at the end, when you have gone through your journey of building Holvi, then you are selling Holvi to BBVA, to then reacquiring it, and you did succeed to not kill Holvi after the 2 years, right? What would you say has been some of the biggest learning moments for yourself as a profession and as a person?
Well, I think one of the key things has been that well, good things take their time. Like and sometimes you really can't predict what is happening next. There is always always a lot of uncertainty, but quite often, if you just stick with it, often good things come from it. Maybe in some ways, kind of personally, I've had unusual patience for waiting for like the good or the best things to come around. But yeah, works
Yeah.
for me, not maybe for everyone.
As I started out with this mini series, we're calling Exit, and we're sometimes in the business media it's glamorized, the acquisition, the selling, the building businesses, cashing in. What's something that you feel that we're not speaking enough about, also for the future founders that are going through and will be going through this journey, that we should talk more about?
Well, I mean, sometimes there's folks that approach kind of the startup game, that hey, I'll just bring this startup and then I'll exit it and I'll get a lot of money and then I'll do all the fun stuff. That's a pretty bad plan. It usually doesn't work. Like the odds of startup success are low to begin with, and
Yeah.
and if your motivation is to kind of cash out, then you probably don't have the well, the patience for those good things to happen. And maybe the other thing is that even if you then sell the business and you're financially independent and you can do whatever, then you go and travel and ski and surf and whatever for a year. But then you're like, is this it? Is
Yeah.
this what I'm supposed to do? Like,
Yeah.
and then they're back at founding a next company. So,
Yeah.
so I mean, it's the actually doing stuff, getting things done, building something, getting something new into the world. I mean, that's the journey is the reward in out of it itself.
The journey is the reward in itself. I like that. I totally agree. And Tuomas, what's the future for Holvi then?
Well, I mean, as we call ourselves now since 2011, Indie Holvi. So the plan is to continue independently and build the business. I mean, in some ways, we keep doing things differently from other folks who might have a investor with loads of cash, and then they have loads of cash to burn. So our approach is different. We invest the money to growth from what our customers pay us, and aim to run a profitable company that we can grow and grow the value for all of us. And if you're like, in some ways, we're kind of just a normal company, and we pay dividend if the year has been good, and so if in that sense, yeah, we're maybe not in the build things fast and exit it, but more build things patiently and take the with the rewards off the table as you go.
Yeah. I think that's very fascinating that you have been through the full circle, as I mentioned, and have now decided, at least for now, decided not to go down a similar route as you did in the past. Is it too out there to say you got scared off?
No, I don't think it is. I don't think it is. And I mean, it's not that we're kind of vetted that this is the only way that you can do things. I mean, the market is evolving. There is new competitors. There is kind of maybe you see in a way the neobank scene maturing into full banks. That might be in the cards for us as well. And then you might have these kind of points in time where the next step actually requires external capital, and then that's what we.
It's a fresh perspective to it, right? Versus it feels a little bit like a handbook per se. But going into raising capital, that is also something that the third episode in this mini series Exit is going to talk about, how that whole space have changed as well, because you no longer need as much capital as you did in the past because of AI. You don't need as many resources. You don't need as much, back end. You can do things much faster. So that's going to be something I'm going to dive into in the next episode of the Exit miniseries. But for now, Tuomas, it has been a pleasure. I'm happy that you rejoined me after the power out. Luckily, we were not influenced by the bigger electricity challenges we have in the world, but just near your desk. But thank you so much for your time, Tuomas. It has been a pleasure to get to know you and Holvi even more.
Thank you. This was fun. Thanks.
Thank you so much for spending your time with us. I hope you enjoyed the show. If you have feedback, topic ideas, or guest recommendations, we are all ears. Pantrium is growing thanks to our community of listeners. So if something resonated with you, we would love for you to share your favorite takeaways. And just a quick note, the views shared by our guests are entirely their own and don't necessarily reflect the companies they work for. That's it for now. Thanks again for tuning in. Until next time.